reclaimed a huge amount of energy and that converted to money. And that accrued to the people most of it accrued to the people that use the Apple product. That's why they became the most famous brand, right? I mean, everybody knows it's kind of cool to have 500,000 photos on your iPhone, right? It's like, and they're all there. So it accrued to them, but a small portion of it accrued to Apple, and that went to their shareholders, and that made them the most valuable company in the world. So in 2010, 2011, I looked at it and I said, well, eventually everybody's going to want this. Eventually everybody's going to have a computer in their pocket, and it's pretty clear it's kind of a winner-take-all thing. Apple ended up generating all the profit in the mobile phone industry, and everybody else lost money to compete with them. So it wasn't like they had 20% market share and got 20% of the profit. It was like they had the best product. They had 150% of the profit. 150% of the profit, 25% of the market. Everybody else lost money to compete in the space. And where did they go? Remember what happened to BlackBerry, what happened to Nokia, etc. Eventually, they all just went away. Motorola, if you recall. So the way you make money is when you see a digital trend. Everybody needs it. Nobody can stop it. But nearly everybody disagrees with you. Right? It's like if the majority of people disagree with you, they don't understand it, but nobody can stop it, but everybody needs it. That describes Amazon, right? If you go back and read investment research on Amazon, everybody hated it. You know what they said? They said, oh, this is an awful retail company, they don't make any money. Well, they kept not making any money while they sucked the entire market up, and now there's Amazon, Walmart, and everybody else is bankrupt, right? 20,000 retail companies fail. One or two, Amazon, Walmart, Target kind of are there, and then Amazon runs by everybody. It's because everybody, who doesn't want to have everything they want delivered to their door in 1 hour for free? Who doesn't want that? Just like with Google, I want to go and I ask a question, I want the answer instantly, quick, and I want every book and every piece of information the human race has at my fingertips instantly. Well, who doesn't want that? Everybody wants that. How about YouTube? Okay, well, it's everything you want to know for free instantly, everywhere in the world. Okay, so everybody's eventually going to need it. Billions, there's YouTube videos, they've got like 9 billion views, on the video, right? So everybody wants it, nobody can stop it, but then again, everybody thought it was a stupid idea, right? They didn't really get it. And the same was true with Apple. It's like people just didn't get it. And I'm like, well, a device that basically does everything you want it to do in your pocket that's, a million times more powerful than the computer in the space shuttle. And everybody said, well, it's too expensive. Remember they used to say, it's too, you could buy Nokia phones for like $30. And the iPhone came out and it was $500. And the people made fun of it. It's 10 times as expensive. Well, what happened next? Well, Apple raised the price to $750, and the other phones were $20, and then Apple now sells iPhones for $1,500. So Apple keeps raising the price of the iPhone, and all these other cheap phones went to zero, because at the end of the day, the point was, it's what people want, right? It's just better. People used to think, oh, they just want the cheap thing. Just like they'd make fun of Amazon for this or that, but no, they don't. So those companies, they represent the digital transformation of retail, of information, of relationships. They made fun of Facebook, but it's like when 4 billion people or 3 billion people are on a network, it's just so incredibly powerful that you can't stop the thing. These companies are now more powerful than a lot of countries, a lot of national governments. But the key point I'd make is the time to buy them was when everybody laughed at you. Back in 2010 to 2012, most people would have laughed at you. with regard to Apple, they would laugh. They would say, well, it's too expensive, and Nokia's got the market, or Motorola this or something. Or they'll never, the telephone companies will control the business. Or they would say, well, the stock is too high, so you should sell the stock, because here's a classic one. It was 5% of my portfolio, the stock doubled, now it's 10% of my portfolio, but my investor mandate is I never want to have any stock more than 5% of my portfolio. So every time Apple doubles, the gigabrains sell half their position. And so then it doubles again, so they sell half again. So then it doubles again, so they sell half again. So then it doubles again, so they sell half again. So after 10 years, they've got a little bit of Apple stock, and they bought all of the computer companies that went bankrupt. And they did it in a risk-averse fashion. And, again, the key point is diversification is selling the winner to buy the loser. And it's this common Wall Street meme or cliche, and they probably teach you in business school, and a bunch of guys in suits, they will tell you that. But all those dudes in suits that practice diversification, they didn't get rich because they diversified. They got rich because they instilled fear, uncertainty, and anxiety in a bunch of other people who then gave them their money and agreed to pay 2% management fee and give them 20% of the upside. So if you think about classic Hollywood, classic Wall Street masters of the universe, they will manage your money. You're a retiree, you're a doctor or a dentist, you give them your money, you give them your life savings. They charge you 2% a year, and then they take 20% of the upside, and then they tell you that it's too dangerous for you to own Apple, it's too dangerous to own Bitcoin, it's too dangerous to own Google. You can't do that, that's irresponsible. So here's what happens next. You give them $1 million at 2 and 20, and if you actually understand statistics or financial modeling, and then you just take that $1 million and invest it in the S&P index, and the S&P were to go up 10% a year, they get 4% a year and you get the other 6. Which means that you just gave them 40% of your money. You had $1 million and you just gave them $400,000 and you got the other $600,000 back. And so, if you ask yourself the question, who are the people telling you diversify? It's the people selling you the diversified funds, or they hold themselves out as these brilliant diversifiers, and what they're really doing is taking all your money, right? And on the other hand, name a billionaire that got rich by diversifying. Jeff Bezos didn't get rich by diversifying. Mark Zuckerberg didn't get rich by diversifying. Steve Ballmer didn't get rich by diversifying. Steve Jobs didn't get rich by diversifying. Pretty much, Elon Musk didn't get rich by diversifying, right? You could go on, and let's take even Warren Buffett. The most profitable trade Warren Buffett ever made? He bought Apple stock. And he made more money they bought Apple stock 20 years late, or whatever, and they made more money on Apple than they made on every other stock investment in the history of the company. And they made it in like 5 years. And it was concentrated position, like by the dominant mobile company, right? And so I think that people are misled and they don't think about it much, right? If everything, by the way, it's no good to diversify if everything's correlated. For example, you could buy every possible company in Nigeria, but if they're all correlated to the Nigerian naira and the currency collapses, what good was diversification? So you really have to think about this. It's like, I wouldn't say that there aren't successful people that happen to be diversified. I would just say that oftentimes this is a mantra that's brainlessly recited to give people an excuse to not think. And it's like, well, I got to diversify, so I own 37 different things. So that means you don't really understand any of the 37 things you own. And I would advocate you should spend 1,000 hours obsessing over each thing you own. And if you're the kind of person that can spend 5,000 hours and spend 1,000 hours on each of 5 things, then, good for you. Maybe you'll end up owning Apple, Amazon, Facebook, Google, right? And then maybe you'll say all 4 worked. And that's not so bad. But, I'm skeptical of a lot of the other, ideas that circulate, and they're just kind of mindlessly repeated over and over and over again. What happened a decade ago was the digital transformation of all those things. It was the digital transformation of information. And it created trillions and trillions of dollars of wealth. And you could have actually made a lot of money if you jumped on that wave. What you have to do is pick the winner, right? There's 1,000 digital retail companies. There's one Amazon. You don't want the Amazon of Singapore. You don't want the Amazon of Nigeria. You want the Amazon, right? So you see, you have to pick that. There's one Apple, there's one Amazon, there's one Google, there's one Facebook. If you picked it, there's one Microsoft. If you pick it, you win. You pick the number 3, you probably lose. And so that was a big wave. But by 2020, that was still unstoppable. Like the Magnificent Seven has been an okay investment. Like if you bought all those stocks in 2020, you probably doubled the performance of the S&P index. The S&P index is up like 40–45%. If you picked the best 5 companies in the index, well, you double that performance. If you picked the rest had no return. Okay, so there's 493 or 490 companies that don't return anything. They're all losers. There's 5 to 10 companies that are the winners. And if you pick the winners, you do better than the index. If you pick the index, at least you brainlessly got some winners. But of course, Bitcoin outdid them by a factor of 3 or a factor of 2 to 3. So why was that? And the answer is by 2020, 98% of the people didn't disagree with you if you said Amazon was a good idea. See, by 2020, most people agreed with you that Amazon was a good idea. Most people thought, well, Google, Apple, Amazon, Facebook, they're monopolies, and Microsoft. Once everybody knows they're monopolies, once everybody knows they're unstoppable, once everybody knows that they need them, then you're not going to get a 10x or a 100x performance anymore, because all the capital has already moved into the market. Now, there's 2 problems with investing in those Magnificent Seven stocks today, in my opinion. And the one problem is everybody knows they're good, and everybody knows they're essential, and so the market is adjusted, and that means that they're not undervalued. The second problem is the regulators and politicians will increasingly target them. They're targets because they're companies, whether it's targets to unionize or targets to fine or targets to regulate or targets to embargo or lever or censor, they're just, or tax, they're just targets, and that's challenging. And the third is they're companies. And this is related to the second problem, but it's a much deeper idea, which is a company is a capital structure, and the capital structure has a finite capacity for you to invest in. So for example, if the stock of a company triples overnight, like Meta doubled the other day, if it doubles, then, and it's valued based on cash flows, and then the cash flows have to double. If you double it again, the cash flows have to double again. If you increase the stock value by a factor of 10, expectations for cash generation have to increase by a factor of 10. That makes them even stronger cash derivatives in a period when you have inflationary money. So you're valued on cash flows, the money is losing its value, and so the debasement of the currency strikes at the heart of the value proposition of the company as a store of value. So that makes them increasingly risky and fragile. And that's exacerbated by the fact that there's massive political pressure in the conventional financial environment for them to return their capital to their shareholders. So when Meta stock doubles, they announce a $55 billion stock buyback. And then they announce a dividend. And that's Apple's playbook. Apple has been buying their stock back and dividending out their excess cash. Well, the problem is the company is valued, or the stock is valued almost exclusively on the P&L, or that is to say, the discounted value of the cash flows as expected into the next future, the next decade of cash flows. Now, if they took all their cash and they bought Bitcoin, let's think about like Meta, if they didn't give back the $55 billion. What if they actually bought $55 billion worth of Bitcoin? Now think about that for a second. Like, if they even bought $10 billion worth of Bitcoin and they announced that to the marketplace, Bitcoin would triple. They would have $30 billion of property. It would be going up 20 to 30% a year. So within a few years, they'd have $100 billion of property. If they actually executed the $50 billion buy, you would have $150 billion worth of property within 24 months. And that $150 billion would be accreting at 20 to 30% a year. But let's just say 20% a year. You're going to generate $30 billion of investment income per year, compounding. And so now you end up with a company where the balance sheet is worth hundreds of billions of dollars, not just the P&L. And so most of these companies, they don't have property, so they're valued on cash flows. And that means as a store of value this decade, that's increasingly risky, right? It's probably the best conventional idea anybody has, but you know, having the best conventional idea is, you know, it's like buying the best building in a war zone. It's like, okay, well, it's the best you could do, but you're still losing. Or it's like, it's finding the most comfortable cabin on the Titanic. The ship is sinking. You have the presidential suite. Good for you. Now, I think that's hyperbolic in this case. I don't think the Magnificent Seven are sinking, but I think that when you're stuck in a certain frame of reference, there are just various degrees of mediocre outcome. There isn't winning. In order to win or get an excellent outcome, you have to think outside the box, and that means if you're in a war zone, you got to leave. If you're buying currencies that are denominated in a collapsing currency, you know, whether it's a peso or a lira or a naira or whatever, you got to get out of that currency. If you're buying currency derivatives denominated in dollars, forward discounted, and you know the dollar is going to be inflated at 7-8% a year, well, that's your hurdle rate. You're going to have to grow your cash flows faster than 8% a year. Now, how many companies can grow their cash flows 15% a year for the next 20 years? Okay, now you might find some. Now the question is, can you protect them against politicians, foreign and domestic? Right? If your local politicians like you, will the foreign politicians like you, or vice versa? So those kind of investments, they're very fragile, and I think you got to be aware of them. And so I guess that's why I did what I did a decade ago. It paid off really well, but when 2020 came, the entire world changed, and the question is, what's the next thing? Yeah, Bitcoin's the next thing, but Bitcoin is like, I've said it before, it's kind of like Apple or Google in 2010, misunderstood, everybody needs them, nobody can stop them. But it's a bit better because Bitcoin is an asset class, and so its target use case is store of value for the civilization, which means that there's no reason why it doesn't subsume gold, and gold's worth 10 trillion as a store of value. Why can't it subsume real estate at 100 trillion? Why can't it subsume all store of value property, which gets you to 200, 300, 400 trillion? And the more valuable it gets, the more useful it gets, right? The fundamental big idea, and it's very difficult to explain this to people, but if Bitcoin increases in value by a factor of 100 because people buy it as a store of value, it's 100 times more valuable. Whereas if Apple stock is 100 times higher priced, the cash flows in the next 20 years have to keep up, right? And people that criticize Bitcoin, they say, well, it's got no cash flows. Well, that's not the defect, that's the feature. It's not a liability. It's the fact that it's something that is not valued on cash flows means it's never going to miss its quarterly cash flow expectations, right? In fact, it's a reflection of the cash flows that have flowed into it. And so Bitcoin is just a much more powerful idea. It's the digital transformation of capital, right? It's not digital information, it's digital energy, right? Energy is matter, energy is capital, energy is property, right? And so Bitcoin is digital energy. Google and Apple and Amazon, they were all about digital transformation of information. And I think that was the 30 years, it was a 30-year trend. I just think we're kicking off another 30-year cycle. And Bitcoin is this big driver of this digital transformation of energy. I use the word energy because energy is conservative, right? It can neither be destroyed nor created. There's conservation of energy, just like capital, right? I send you $1 billion, you get the billion, I don't have the billion, right? Whereas when I send you my record collection, you've got the records, I've still got the records. You see? I send you my photographs, you've got the photos, I've got the photos. So information is non-conservative, energy is conservative. Bitcoin represents the digital transformation of capital, right? Most people don't agree. Most people don't even understand, right? Right, the beauty of this is it's not that they understand and they disagree. It's like you say Bitcoin is digital energy, and even the people in the crypto space will disagree with me. They're like, what do you mean? No, it isn't. It can't be. Like, that's not what it is. They don't get it, right? And so that's a paradigm shift so profound that you can say it in front of someone, and unless you have 100 hours to show them 100 examples and conduct a Socratic tutorial for them and answer their 100 questions and show them three-dimensional visualizations and then make 100 connections. If you don't have that time, they just look at you, they blank, they disagree, they misunderstand, and so they don't buy. But that's exactly what you want. You want something which can't be stopped. The fact they don't agree and they don't understand doesn't mean it's stoppable any more than I start a fire in Chicago and it's burning. It's like you might not understand it's a fire. You might not know fire. You might wish there isn't a fire, but the fire's coming, right? It's not stoppable, right? It's a chain reaction. And this is a chain reaction right now. That's what makes it, I think, such a compelling proposition. I think the risk-reward proposition for Bitcoin in the year 2024 is better than any other time in the history of the asset because you have institutional adoption, you have regulatory clarity, you see capital coming into the space, and yet still you can do the survey yourself. Ask 100 of your friends if they're fully invested in Bitcoin and if they understand it. And if 95 say no, I would say do your own research. But Bitcoin's 15 years old, so let's look at other great investments. 15 years after Manhattan was founded, was it a good investment? We could start 200 years after Manhattan was founded. In 1776, roll the clock forward, 1791. Was it a good investment? Was real estate in Manhattan in 1791 a good investment? Was it a good investment in 1865 after the Civil War? Was it a good investment in 1970? Was it a good investment 15 years afterwards in, 1995? Was it a good investment in London 20 years ago? 2,000 years after the Romans showed up in London, was it a good investment to buy London property? Right? I mean, these are scarce, desirable properties, right? It's 15 years late is not late. Right? The difference between the winners and the losers is the winners buy something valuable and the losers are afraid, right? The losers are afraid to buy the valuable thing because it's too expensive. New York real estate was the most expensive real estate in the United States 300 years late, right? It's always been the most expensive. Apple Computer was founded, I think, 1976, around then. 15 years after Apple Computer was founded, was it a good investment, right? Check the price of Apple stock in 1993 or 1996. I think in 1998, Michael Dell told the board they should shut it down, give the money back to the shareholders. But the truth is, at many, many points in time, it was a good investment. I think, as I'd said, the real key is to understand what is Bitcoin's use case. It's digital capital. Well, how big is that? $400 trillion? Right? How much capital is locked up in real estate, equity, currency, bonds, collectibles, trophy assets, precious metals in the year 2024? Right? It's probably half the value of most residential real estate is the monetary premium. It's the capital. So, how do you know this? I give you a little test. Go to Miami Beach, go up and down the beach, and then count the number of lights on in a condo building on the beach. Or go to Monaco and count the number of lights on. And what you'll find is that 80 to 90% of all of the condos don't have lights on at night. So people have huge amounts of capital tied up in these idle assets. And there's a lot of reasons for them, but one reason is because they feel like their money is safer there. So in the 20th century, people basically bought sports teams. Ask yourself, what do rich people own when they get rich? They bought sports teams, they bought real estate, they bought companies, they bought land, they bought timber rights, they bought oil rights, they bought gold, they bought, bonds. They just bought stuff. Why? Because they knew if they left their money in the bank, it was going to dwindle away. Buy anything. They buy Picassos, they buy art, right? They buy stuff. So there was never a perfect digital capital. There was never a digital instrument where I could, if you were a rich Russian and you had a choice between buying a bunch of real estate in Moscow or buying Bitcoin, well, with ex post facto hindsight, looking back the last 30 years, okay, now let's play that out and you're a rich Nigerian. Now you're a rich, a Turk. Now you're rich in Lebanon, right? And we don't have to be rich. Anybody with any amount of money anywhere in the world, right? You've got the last 100 years of history. You live in Germany in 1930. What do you want, a building or Bitcoin? You live in Argentina. What do you want? You want to own land? You want to own a building? You want a company? You want Bitcoin? The currency is going to collapse 5 times in 140 years. 5 times, right? Okay, so this is why we want to study history. If you study history, you're going to find that the currency collapsed thousands of times. In fact, on average, it collapses everywhere. It collapses everywhere on average every 50 years in the history of the world. And that's maybe me being charitable. So, is it too late? Well, can you actually take all of your property, put it in your pocket, and leave the country on one-day notice if you need to? If not, then you're probably not too late, right? So if you go through that exercise, you can't take your building with you, you can't take your bars of gold with you, you can't take your stock shares with you. People for a while, they bought paintings thinking I'll roll them up, but it might not be that easy to, and the average person can't buy Picassos, and they're not quite exactly at the price point. How do you buy $237 a Picasso a week, right? So Bitcoin represents digital property. What's the value of digital property? Hundreds of trillions of dollars. Is it overvalued? Not yet. It's $1 trillion right now. So when it's 100 times more valuable than it is right now, will it be overvalued? Not likely. It's probably still going to be appreciating faster than every other thing you can buy. Why? Because it's better than every other thing you can buy. Show me a hotel you can put in your pocket and teleport. Right? $1 billion of gold is like 3,000 pounds, right? How are you going to move that, right? Right? Give me a company that's going to last through the next 3 CEOs, right? Do you know who the 3rd CEO will be after the one that runs the company now, and do you trust that person? Right? The S&P 500, haven't we established there's a 99% failure rate? These are the winners. There's a 99% failure rate to generate shareholder value amongst the 500 best companies in the world. Now, if there's a 99% failure rate amongst the 500 best companies in the world, then what's the failure rate amongst the 100 million companies in the world? And, what's the most successful nation-state currency in the history of the world? Well, if it's the dollar's lost 99.8% of its value in 100 years. Maybe 99.9% of its value. You could debate whether it's 99.8 or 99.9% of its value. Every other currency in every other country lost 100%. So, if you're sitting around wondering, is Bitcoin overvalued? The question is, overvalued versus what? Right? You're going to buy something, right? You're owning something in lieu of Bitcoin. What is that something which is better? Right? That's the real question. Because not selling is buying, but not buying is selling, right? And you basically got a certain amount of economic energy. It's deployed somewhere, right? And the question is, what are you invested in that you think is better? And I think everybody's got to answer that question themselves, but like if you owned a football team, like what's the odds that people are still going to watch football in 250 years? And what's the odds that you can put the football team in your pocket and leave the country? Not high, right? I mean, and what's the odds that, you get attacked by, what if there's some law that says that you're liable for the physical damage and the emotional harm to the football players? And, if someone gets hurt playing football, you have to pay $100 million settlement, right? That happens. Or even better would be, what happens if someone goes to a football game, watches it, and is traumatized by all the violence, and they form a class action lawsuit and they sue you? Mightn't that happen? Happens all the time. Right? Look at the history of opioids, look at the history of cigarettes, look at what's going on right now at congressional hearings around social media. At some point, you'll have trial attorneys suing tech companies because someone used a website and something bad happened to them, right? So there are a lot of risks no matter what you invest in. If you think you don't have risk, you're simply ignorant of the risk you're currently embracing. And I think that once someone understands fully all their range of risk, then your conclusion is, no, it's not too late to buy Bitcoin. I think this is going to be a good year for Bitcoin. I think we started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those 3 things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community, and so I think it'll just keep generating momentum from here. I think it's also worthwhile, I think, to make one point. I think that we're living through the Bitcoin gold rush era, and I think the Bitcoin gold rush era started January 2024, and I think it runs until around November 2034. So it's about 10 years. And I'll tell you why. Because 93.5% or so of the Bitcoin was mined at the beginning of this period. But in November of 2034, 99% of all the Bitcoin that will ever be issued will have been issued. And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%. So think, and actually of that 1%, 90 basis points of it is coming in the 12 years that follow 2034, and then it's 10 basis points, 0.1%. But practically speaking, all of the block rewards are de minimis starting in 2034. It's 1% over 100 years may as well be nothing, because the daily volatility and the daily trading volume is going to render that to be somewhere between third order, fourth order, fifth order of magnitude. So that being the case, really, this 10 years is your best chance to get Bitcoin, right? This is the gold rush, because this is the period where there's still a lot of FUD, there's still a lot of uncertainty, people still aren't sure, they don't understand digital energy, they don't understand digital capital, they don't understand digital property. There's a lot of debate in the community. Is Bitcoin a currency, or is it a property? Or, there's massive debate. And a lot of people say, well, it's a currency, and since it's not legal tender, or because it doesn't move fast enough, or I can't buy coffee with it, it's not a good currency. So there's a lot of confusion in the crypto community. There's a lot of mainstream regulators, they think it's a currency. So you see bankers say, oh, it's a currency, but it's not a good currency because I can't buy coffee with it, I can't buy things online with it, and it's too volatile. And they think that's a criticism. And so they criticize it, and then people that think that they know what they're talking about, they hear some famous person say, well, Bitcoin is not a good currency, and, or the government will ban it, or it's not as good as the dollar or something. And so they get afraid. And they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like, demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right? Right, the people that criticize it, there's no way Warren Buffett spent 100 hours studying Bitcoin, right? There's not likely that everyone that criticizes it spent 100 hours studying it. They haven't read the Bitcoin Standard. They probably haven't listened to 20, 30, 40 hours of podcasts, right? So the critics are misinformed, and the mainstream investors, they have all the money, right? There's $900 trillion of wealth out there. There's only $1 trillion in Bitcoin. So 99.9% of the money, of the wealth, is not invested, right, in the asset class. So a lot of people that don't understand what this is have a lot of money, and yet we've got a 10-year period when there's going to be an explosive increase in education, right? As Bitcoin's going to go up, and as the price goes up, more people are going to get asked, and they're going to reject. They're like, stop asking me. I hate talking about this. Like, we don't like it because it's like gold. It doesn't generate cash flows, or they don't understand. If you don't understand perfect money, right? What's wrong with gold? Gold has emissions. Gold is inflationary. That's why it doesn't work. If you don't understand that, then you don't understand why digital gold is better than gold. So you don't understand Bitcoin, you don't understand money, and then you haven't really thought very deeply about property theory or capital theory. So you definitely don't understand digital capital, which means you don't understand digital energy, which means that when someone asks you, you're going to buy it, your answer is, of course I'm not going to buy it. I don't get it. But when I say to people, right, like, if everybody read all these books, if they listened to all your podcasts, if they listened to all my podcasts, if they thought about it for a few hundred hours, tomorrow they would wake up, they would all buy Bitcoin, and Bitcoin would be $5 million a coin. And then we'd be doing this podcast, and you would say, Mike, all the comments from all my followers are, is it too late? And I would say, well, it's too late for you to get insanely rich. You're not going to get 100x, right? If you buy Bitcoin at 50,000 when it's 5 million, you're going to be bragging to your kids that you got 100x your return, right? So it's going to be too late for that. But it's not too late to buy it, because it's still better to buy the thermodynamically sound digital asset, which doesn't have all of the liabilities of real estate, stocks, or bonds. It's still going to go up in value faster than the S&P index. It's still going to be a better after-tax return than owning sovereign debt. It's still going to be better than owning physical property subject to acts of God, force majeure, and all the other physical limitations. So it's still going to be the best investment. It's just not going to be the investment that got you the 100x return that you were going to brag about. And so there's no reason to worry, right, or fret. You don't want people to figure this out, right? Like if they figure it out, you have 10 years during which you can work and you can buy Bitcoin while everybody else disagrees with you and doesn't understand it because they're intellectually lazy or they're a different generation, right? So that it's like me saying it's 1905 and in 15 years everybody's going to have an automobile, and now you know. Okay, well, you have 15 years to get rich in the automobile business. Figure out, are you going to set up the dealership in New York City? Are you going to start a company? Are you going to be a salesperson? What are you going to do? You have 15 years. Figure it out. This is better than that. But this is a 10, 15 year head start. I had this analogy. It's like you could be working at a McDonald's. You could be working for $10 an hour, right? But if you're sweeping the $10 an hour in an asset that goes up by a factor of 100, you're getting paid $1,000 an hour. Okay, so how long do you want to work at $1,000 an hour? Well, you want to work at $1,000 an hour as long as you possibly can, because once people figure it out, then you go back to your $10 an hour job, right? So we're in the gold rush period. People are, when they think about it, they're going to realize this is the period during which everybody in the world started to realize Bitcoin is digital capital, and there's a digital transformation of money. And that you want to hop on top of that. You want to exploit that. And there's 1,000 ways to do it. Maybe it's just work really hard at your job and buy Bitcoin. Maybe it's start a company. Maybe it's do something different. You decide, right? But I don't ever regret any stacking I did. I mean, we bought Bitcoin, below 10,000. We bought Bitcoin probably above 60,000. I mean, at the end of the day, we never know when the world wakes up, gets rational, and then it runs through the all-time high, and then we regret not having bought more. I would encourage anybody that thinks maybe I'm too late. I mean, I think I would say, well, maybe you just haven't studied this enough, right? Don't give me your money if you're not confident. Give me your time, And if you don't want to invest the time, maybe you don't care about money that much. It must not matter to you that much. If it matters to you, then you spend enough time to figure out whether I'm right or whether I'm wrong. And there's plenty of information out there for you to come to your own conclusion. In every generation, you have to consider the transformational technologies that remake the world. Whether it's the internal combustion engine, or whether it's a computer chip, or whether it's the internet, or whether it's the airplane, or whether it's the piano, figure out, or the electric guitar, right? What's the transformational technology? I rather think right now it looks like the transformational technologies for the next 20 to 30 years are digital intelligence, that is AI, and then digital money or digital energy, which is Bitcoin, right? And the idea that, you can embed digital intelligence into a car, a plane, a drone, a robot, a website, a product, a service, an AI, that's a big idea. And certainly there are going to be massive fortunes made. And if you understand how to embed digital intelligence, right, there's going to be a demand for that. And with regard to digital energy, right, the idea you can embed digital energy into a product, a service, a website, a company, a country, an institution, right, is a big idea. So you ought to think about how you might take advantage of that. Now, there may be other things, right, in the domain of medicine or physics or the like. I'm not an expert on all. I mean, these are two obvious transformational technologies. I would say pick the thing that you love, the thing that you're most interested in, and then I would say focused. Because the most common mistake I think people make is, well, there's two mistakes. One is they pick the last generation technology, right? It's the thing that made your father or your grandfather or your great-grandfather famous, successful, rich, powerful, right? It's probably not going to work for you. You're not going to fight the next war with the same weapons you fought World War II with. And they didn't fight with the same weapons they fought the Civil War with. And you're not going to get rich the same way John D. Rockefeller got rich. So don't try to do what's been done. It doesn't matter how hard you work. No amount of work, right, is going to allow you to overcome a technology disadvantage, right? Nobody cares how hard you work if you're working with a hammer, trying to hammer your way through a mountain. So that's the first thing you don't want to do. But the second thing is, oftentimes people, they find that technology and they have a modicum of success and they get going on that platform, and then they declare victory and they think they take that for granted. So then they go to find the next success. So they want to conquer the second thing, and then the third thing, and then the fourth thing, and then the fifth thing. And what happens, it might be something as simple as you're successful on YouTube, and so then you decide you're going to do TikTok. But TikTok is different than YouTube. And so, you find yourself basically creating mediocre TikTok things, and then your YouTube content gets mediocre too. And then someone else, offers you a third thing, and you decide that's what you're going to do. And pretty soon you're doing three things, and everything's mediocre. And gradually, your customer base, your fan base falls off, your support falls off because you diluted your focus. And I think here's the phrase I would leave with, right? Nobody fails because they pursue bad ideas to the detriment of their good one. They fail because they pursue good ideas to the detriment of their great one. Right? So figure out the one thing that you can be great at, and then don't make the mistake of diluting your focus and your effectiveness because you're good. It's like, don't be Michael Jordan, the basketball great, and then go play baseball. You'd be a professional baseball player. 1 in a million people could be a professional baseball player. But you see, trading the 1 in a billion to be 1 in a million is a mistake. And he figured it out, right? Hopefully you figure it out. The tragedy is you have something which is going to work, and then you get distracted, right? And a lot of these people look at Apple computers, like Steve Jobs. It's like, at the point everybody's written you off, the difference is they don't quit. Like, they don't give up, ever, ever, ever. They just keep going, laser-like focus. And it's easy to say, but, how many people can keep laser eyes on Twitter for 4 years? That's the joke. If you went and counted the number of people that put laser eyes, and then they took them off after 3 months, or 3 weeks, or 3 days, or 3 years. And of course the irony is, right, you can't even get a college degree in less than 4 years. You can't be a doctor without 10 years of work. But a lot of people, they just expect it to work in 10 weeks or 10 months. And I would say, my advice to anybody is find something that gives you a technology edge or lever the ability to create something which impacts the most amount of capital or the most number of people. You want to have the maximum impact, whatever that is, the max leverage. And then once you figure that out, relentlessly refine your craft. 10,000 hours. And then, by the way, 10,000 hours to become the great guitar player, or the great piano player, or the great podcaster, or the great whatever it is. After you do that, then go do it. And then after you get recognized as being successful, don't go on to the next thing, right? Focus upon the thing, right? Keep doing the thing. Don't take your success for granted. Because I think we see all the time people, they take their success for granted, and then they go off to conquer the next, the next objective, thinking that somehow it'll be just as easy, and it's important for them to do it. And what happens is that second thing dilutes the first thing, and by the third thing, they've diluted everything, and by the fourth thing, they're just dropping all the balls, and everything comes crashing down. And there's somebody else in the world, they're going to put in the 10,000 hours, and they're not going to get distracted, and they're going to eat you, because it's a very Darwinian world, and it's very competitive. And if you're not insanely good at something, it's not clear that anybody's going to need you for anything. But money is it's a store of value, a unit of account, a medium of exchange, and then there's a fourth characteristic that we don't talk about. It's the thing that's not said. It's a system of control. So certain monies are easier to control than others. For example, we talk about gold as money, but you ever try to carry a gold bar through an airport?
Very heavy.
Try it next time. They won't let you through, right? In fact, if you tried to carry $100,000 of gold through an airport, not only would you not get through, but the assumption would be you're a criminal, you stole the gold, and they would just take it and keep it without a court order. Now, try to carry $100,000 of cash through the airport. You ever try that? Put it in a bag and just... you can put it in a bag, and as you're walking through the TSA check or the X-ray machine, just nonchalantly say to the officer, "Yeah, I'm carrying $100,000 of money onto the airplane." Right? You won't get through. Now, not only will you not get through, they'll just take your money. Right? They'll just take it, and the assumption will be you stole it. Okay? So cash is a unit of control. Now, put $100,000 in a bank and try to wire it to someone, or just take it out and they're going to ask you why. Tell them it's none of their business. Try to send it to someone privately. Tell them you just want to send it to a numbered Swiss bank account, right? See how that works. That won't work, right? That's a system of control. A couple of stable coins have been getting shut down. Paxos's BUSD got a Wells notice. They got shut down, and Custodia tried to launch a bank, and they wanted to issue AVITs. AVITs were digital dollars, and they were digital dollars that were going to circulate on crypto networks. And the regulators denied that banking license, and it's about a 70-page denial letter, very articulate, and I read it all. I read thousands. I read all of the crypto legislation and all of the crypto litigation. So if you dig into that denial letter, which is very well written and articulate, what is very clear is the regulators say we're not going to allow the bank to form because we don't want someone to issue digital dollars that will circulate on crypto networks non-KYC, evading our our anti-money laundering rules, our anti-terrorism rules, our know your customer rules. So it's clear that the regulators reject with prejudice the idea that you can circulate large sums of dollars without reporting that. Now, that's a political football. right? Because a lot of people in this country think that you should own your own money and you should have financial privacy and you ought to be able to do what you want with your money. There's another group of people that don't agree, right? Ted Cruz is on the side of freedom. You ought to own your own money. Now, it turns out that if your money's in a bank, you're not going to be able to circulate it freely. It's controlled. And on the other hand, Bitcoin is the one network you can't control. You know, Ted Cruz's famous line is, "I like Bitcoin for the same reason the Chinese don't like it. They can't control it." Nobody can control Bitcoin. So if you're insecure about being able to own your own money, do you own it? And can you actually use it without asking somebody's permission? Then the solution is not gold, it's not silver coins, it's not stacks of cash, it's not money in a bank in the US, it's certainly not money in a bank in Lebanon, Argentina, anywhere in Africa. Those banks won't let you take your money out of the bank. Go look at Nigeria, $42 a day, that's how much you can take out of the bank. They're keeping your money. So the one network that you have that gives you a decent chance of owning your own money and then being able to spend it the way you want is Bitcoin. So I'm not worried about Bitcoin. I do think that there'll be a massive political fight over CBDCs. There's a technical challenge. Our government doesn't know how to issue a CBDC. We don't know how to issue digital currency. The people that are issuing digital dollars are the cryptocurrency people, right? You know, Paxos knows how to issue a digital dollar, right? And the regulators sent him a Wells notice saying, shut it down. So the private market knows how to issue digital dollars. The government doesn't, the EU doesn't, the feds don't. And so even if they wanted to, they can't technically right now without somebody else's help. But as long as Congress is split, right, it seems to me quite clear there's a large faction, by the way, on the Democratic and the Republican side. I mean, Robert F. Kennedy, I don't think is in favor of a CBDC, nor is Ron DeSantis in favor of a CBDC. So there are a lot of free-thinking politicians in both parties that are adamantly against having a system of control where the government can decide how you know, it used to be $10,000 was the cutoff of the report, right? It used to be you had to report when you wired $10,000, and that was back when $10,000 was worth something, right? It used to be, I think it dates back, what, 30, 50 years or something? So it used to be $10,000 was a lot of money, and then they kept the $10,000 limit, and inflation creeped up, and pretty soon $10,000 is not nearly so much money. And what we're seeing is an encroachment of that, where now people are starting to lobby for the government to get a report on everything spent more than $600. You know, politicians have shown themselves quite capable of interfering in your private affairs, and the last 3 years have shown anything. They've shown that people can come up with some justification to tell you how many people can sit at your dinner table on Thanksgiving, right? And so there'll be some of them. I don't think that politically it's going to fly in the near term. In the next 2 to 4 years, I don't see consensus at the political level to impose a CBDC. But I think it's like that persistent boogeyman where people say, oh, it's coming, and the result is more interest in the antidote to it. So I don't think it's bad for Bitcoin. I think it's good for Bitcoin. I do think we ought to be concerned about money being used as a system of control. Is very disturbing. Well, I mean, to be clear, I don't expect it to happen. I don't think that there is consensus in the Democratic Party or the Republican Party to implement a CBDC. I don't think they know how to do it. I think there's resistance to it. I think that what's going on right now is there's a regulatory crackdown on crypto. And so what is happening is the administration is cracking down on crypto exchanges. It's cracking down on crypto securities. It's cracking down on some of the crypto tokens, and it's cracking down on cryptocurrencies. And by currency, I mean a stable coin, like a dollar circulating. And I think that that's creating quite a lot of sound and fury and friction and anxiety in the industry. I think it'll continue. There is no coherent digital asset framework that's been offered by any regulator. There isn't any coherent digital assets framework offered by any legislator. We're nowhere near that. Like, there's not a bill we're debating that if it gets voted on will solve the problem. There is no bill.
Got it.
Okay, and so the talk about CBDCs gets people quite spun up, rightfully so. But I think the story here is CBDCs are going to be a non-starter in the free world, and even in the place that's closest to it is China, I suppose. And so I really think that it's a Chinese concept, and I don't really think in the free world we want to be like the Chinese. And I think ultimately both sides of the aisle will agree on that. They won't agree on other things. They won't agree on private money. Like, for example, probably the Republicans and the conservatives would be in favor of private companies issuing digital currency and letting it circulate. And on the other side of the aisle, they're a bit more conservative, and they would say, well, we only want banks to issue currency that report to us on every material transaction. But none of the banks were able to issue a stable coin either. Signature Bank was unable to issue a stable coin. Silvergate Bank was unable to issue a stable coin. And Custodia wanted to be an FDIC approved bank. They were unable to issue a stable coin. And when you ask those banking executives, they said, well, the regulators wouldn't let us. I mean, this is the struggle of, control versus freedom that's as old as time, right? In every society, in the history of the human race, every society, there's always people that want to impose control on the people, and there's another group that want freedom. I've been reading Conceived in Liberty, which is Mary Rothbard's history of the American colonies before the Revolutionary War. And it's hundreds of chapters, non-stop struggle. Someone wants to control a colony. They want to tell you what to think. They want to tell you, who God is. They want to define religion. They want to impose taxes. They want to seize your property. They want to tax your property. They want to impose monopolies. And then there's another group fighting for freedom. And it was going on for hundreds of years before the Revolutionary War. I mean, there were monopolies in New York on who could bake, There were tariffs on using the Hudson River to go up and down the river. There were monopolies on who could trade with the Indians. They would give you land, they would steal your land, they would tax the land, people wouldn't pay the tax, there were rebellions. It's hundreds and hundreds of struggles. So it's been going on before the revolution. It's going on in every country in the world. Today, it's certainly going on, and if you have any political power, I think the best way to use it is to support those that trust people are in favor of freedom, because there tends to be, or seems to be, this never-ending tendency of governmental organizations to get stronger, and as they get stronger, they raise taxes, they funnel the taxes into the police state and the control state, and pretty soon, it's illegal to bake bread. It's illegal to row up a river. It's illegal to cross the river. It's, if you have land, you have to pay tax. If you pay tax, it has to double. If, the taxes were used, it used to be we paid tax to pay ministers to preach religious beliefs that you disagreed with. And if you actually laughed or kissed your wife on a Sunday, they whipped you. Fined you and seized your property because you were disrespectful to the Almighty Lord. And I'd like to say it was unique and a one-time thing, but it wasn't. It's kind of the history of humanity. So it's going on today. It's reprehensible, And you can't see politicians that will articulate that message that the people cannot be trusted and the government needs to control everything. Luckily, we're in Florida where we have a number of politicians that believe differently. I'm hopeful that we'll see a backlash to the control tendencies in the political sphere that have manifested themselves over the past few years. And CBDC is just one of those touchstones. It's not the only one. It won't be the last one. It wasn't the first one. I think gold's getting demonetized by Bitcoin right now. If you look at the past 3 years, since MicroStrategy bought $250 million worth of Bitcoin in August of 2020. Since that time, Bitcoin's up about 140%. The S&P's up about 20%. NASDAQ's up 10%, gold's up 1%. Silver's down about 8%, bonds are down 18%. Conclusion, right? If you buy debt, government debt, you're going to be bankrupt. That's why those banks are going bankrupt. All the banks had debt. When the interest rates went through the roof, the debt traded down, and they all were technically insolvent. The problem with gold is, first of all, if I bought $250 million worth of gold, I can't carry it around in my pocket. I can't take self-custody of it. I can't move it anywhere. I can't transfer it to a counterparty. And so that means I have to put it in a bank. There's only a handful of banks in the world that custody it. And the banks rehypothecate the gold. So that means that if you wanted to sell $250 million of gold, the bank will sell your gold. If you want to buy it, they'll sell you paper, and the paper gold isn't backed by the actual gold. So you have fractional reserve banking of gold, right? You don't want to own an asset where the bank can sell 100x more of that asset than they own. The whole problem with fiat currency, right? If you look at the history of banking, it was, goldsmiths. Goldsmiths have gold when gold was money, and they give you a note. So you give me $1 million of gold, I give you $1 million note, you trade the notes back and forth, that's your paper money. That works fine as long as it's a one-to-one. But then the guy that's the goldsmith says, holy crap, I actually can give him $1 million note, and he thinks that I've got $1 million of gold backing it, and now there's $2 million in the system. And then I give him $1 million, and now there's $3 million in the system. Now there's 3 times as much money. There's one stack of gold worth $1 million. Prices go through the roof. That's inflation. And eventually you come back and you try to redeem your paper for the stack. I give you your gold back, and you try to redeem, and the gold's gone, and you try to redeem, and the gold's gone. Okay, I'm bankrupt. Oops. Okay, so when did this idea of over-issuing paper money start? Didn't start, when Nixon defaulted on the gold standard, he wasn't the first, he was just the most famous, right? People have been defaulting on paper money probably for thousands of years.
And Nixon just made it official.
Yeah, so the issue is, if gold is money and it goes into a bank, the bankers issue 10x more paper than there is gold. You have inflation. Eventually, right, when the French tried to redeem their paper dollars for gold, the U.S. basically closed the gold window. We defaulted on that obligation, and we started a cycle of inflation from 1971 on that's been running 50 years. Now, when FTX failed, it was no different. The issue is people put Bitcoin on FTX, and then Sam turned around and issued 3x as much paper, obligations. And when people try to withdraw the Bitcoin, he doesn't have it, he fails. When Silicon Valley Bank failed, or when any of these other bank fails, they had a certain amount of money, and then they turned around and they invested it, and their investment was in government securities. The securities traded down. Now they were insolvent. When people try to withdraw their money, they don't actually have the money to pay them off. The banks fail. So when you look at this banking crisis, what's going on? What you've got is a bunch of banks everywhere in the world that have shaky assets, right? What's really shaky? Well, if you actually hold Argentine pesos or Nigerian naira, and then you triple the supply of them every year, the value goes to zero, right? If that's your currency base or your asset base, you're going to be insolvent. When people put $10 billion into a bank backed by pesos, the peso goes to zero. The bank turns around and reloans out $20 billion. Now there's $30 billion circulating on $10 billion in the bank. When you try to withdraw the money, the bank collapses, the entire economy collapses. That's going on everywhere in the world. It's much worse in Lebanon or Nigeria or in Argentina than it is in the US. It's bad in the US, and it's cracking on the seams with, First Republic Bank and Silicon Valley Bank and Signature Bank and the like. But what do you conclude if you're an individual? If you're if you're a company, or if you're a family, or if you're an individual and you live in Zimbabwe, what would you do? Well, you're not going to buy gold and put it in the bank. The bank's just going to seize your gold. You're not even going to buy dollars and put it in the bank. The bank is going to seize your dollars. You're not going to buy local Zimbabwe dollars. They're going to zero as you stare at them. They're going to lose 10% of their value a month, right? They're just melting in your hand. So you got to buy something you can custody. So before Bitcoin, you would have bought bars of soap, crates of toilet paper, you would have bought motorcycles, you would have bought a Humvee, you would have bought barrels of oil, you would have bought anything, you would have bought food, you would have bought bullets, you would have bought guns, anything tangible that you can self-custody, you would have held. Now, after Bitcoin, you now have, for the first time in human history, the ability to buy not a barrel of oil, but $80 worth of Bitcoin, and you put it on your phone. And now you can go through an airport with the Bitcoin. You can't go through the airport with a barrel of oil, right? And you don't. What's the big difference? The difference between gold and Bitcoin, and the reason Bitcoin is up 140% and gold is up 1%, is the middle class family can custody their own Bitcoin, and a wealthy person can either hold $10 million of Bitcoin in self-custody, or if I live in Africa, I can move the $10 million of Bitcoin to Monaco, Singapore, London, Paris, New York, or Miami Beach. And that is not an option you have with your gold. It's not an option you have with your dollars. When you're an Argentine citizen, and you actually call up the bank and say, hey, move my $1 million out of Argentina and send it to Switzerland, they're like,
not so fast.
No, they have capital controls, they have banking controls. The people in Lebanon with millions of dollars in Lebanese banks, they wanted to get their money out of Lebanon. It was like, well, sorry, your funds are frozen. Why? Because the bank never had the $1 million. As soon as you put the $1 million in the bank in Lebanon, they turned around and loaned it to the government. It's gone. The government spent the $1 million. You try to get the money out, the bank closes its doors, right? Is that illegal? No, because the guy that runs the government passed a law declaring a bank holiday for the good of the country, saying that we can't allow you to redeem your dollars. So the bottom line is, if you're trying to use money that requires banks, you can't trust the banks, right? You certainly can't trust the banks in Africa, in South America, and most of Asia. It used to be Americans thought they could trust American banks. Now they're realizing that they can't trust American banks. So the first order impact of the banking crisis is people think, well, maybe the money I had in the bank's going away, and so I ought to put it in a bank in cyberspace that isn't controlled by the government or by the bankers, and that's Bitcoin. The second order impact is the solution to the banking crisis is print more dollars. And if you print more dollars, the actual monetary inflation rate goes 10%, 15%, 20%. So you think, why do you think those bonds crashed? because there are actually claims on dollars. Do you really want to hold $1 billion of Zimbabwe dollars? What if I offered you 10 billion Zimbabwe dollars? I mean, the answer is it's going to a nickel, okay? So if the paper currency keeps crashing, then you can't own anything that's currency related. You can't own a currency derivative. You need to own something that politicians can't print more of. Okay, well, that's oil, that's land. But the problem is, try hauling 100,000 barrels of oil from where you are to London, where you want to be. How are you going to do that? I'll give you $1 billion of land in Central Africa, and then someone takes over with machine guns and declares that everyone with large amounts of land now loses it. That happened in Zimbabwe. You're going to pick up the land on your back and carry it to France? So it's simple. If people lose faith in the banks, they lose faith in the currency. When they lose faith in the currency, they lose faith in the government. When you lose faith in the bank, the currency, and the government, and someone says, what can you trust? The answer is you can trust Bitcoin because you can custody your own asset, you can run your own node. And at the end of the day, even if the Chinese want to shut it down, they can't. If the Russians want to shut it down, they can't. If any nation state wants to shut it down, they can't. If the US wanted to shut it down, they can't. And so everybody wants something that they can trust that is beyond the reach of a corrupt politician, a corrupt corporate executive, or they don't have to be corrupt. They can just be well-meaning, trying to do the right thing in a misguided fashion. Money is a store of value, and there are multiple monies, and they're not created equal. So let me give you the world's worst money. The worst money in the world is like Argentine pesos or Venezuelan bolivars or Zimbabwe dollars or Nigerian naira. Weak money. The official inflation rate in Argentina is 105%. But that's the official rate, which is that understates it. The actual inflation rate would be higher. And if the inflation rate is running 100%, that means your money is losing half of its value every 12 months. That means that within 10 years, you have nothing. Okay, so bad money, bad currency or bad money loses all of its value over the course of a few years. In Venezuela, you lose all your value in 36 months. In Argentina, in 10 to 20 years, the Argentine peso was 1 to the dollar 21 years ago. If you had $1 million 21 years ago, the Argentine peso right now is about 480 to the dollar. So that's not a 99% loss. That's a 99.8% loss, right?
In how many years?
21 years. Okay, so what I'm saying is you don't have money if you have weak currency. Now let's take strong currency. Well, the strongest currency in the world is the dollar. That's not money. You're losing 99% of your wealth over the course of 90 years in the US dollar, maybe more. The US dollar, the only difference between the US dollar and the peso is whereas it takes 20 years to lose your family's fortune in the peso, it takes about 90 years to lose your family's fortune in the dollar. Right? My house in Miami Beach was $100,000 in 1930. It was appraised at $46 million a few years ago. Do the calculation. It's on a path to be worth $100 million, which means that the US dollar will have lost 99.9% of its value over 100 years. Warren Buffett knows this. Charlie Munger knows this. Basically, the bottom line there is your money in the bank isn't money. Okay, so the answer is you shouldn't have any money in a bank, right? You're basically losing 7% of all your wealth every year in a good year. If it's the dollar, you're losing 15% of your wealth in a not good year. If it's the dollar, you're absolutely losing all your money over the course of a decade. So that's kind of weak money. Awful money is developing world money, the Lebanese pound.
The Lebanese pound got devalued. I mean, you would have lost all your money in 5 years if you had the pound. The strongest money, decent money, okay money was gold, but not great. The strongest money in the world is Bitcoin, because Bitcoin is absolutely capped at 21 million. It is global money. You could take $1 billion of Bitcoin across a border. You can transfer it to a counterparty, and no government can interdict that, and nobody can inflate that. And so my answer there would be, you can't trust any bank. You certainly can't trust a bank in Lebanon. Read about Lebanese banks. You can't trust a bank in Africa. You can't trust a bank in Asia. You know, Bitcoin is a bank in cyberspace run by incorruptible software. It's going to keep your money. If you are incompetent, then you're going to suffer the consequences. But let's think about what banking executives in the U.S. do. The U.S. banking system is the best in the world. Here's what they do. You put $100 billion into the bank, they have the deposits, they turn around, the Federal Reserve interest rate, short-term rate was 0. And these guys went and invested $100 billion of those deposits in mid-dated, long-dated sovereign debt that was yielding 1.8% interest. The Federal Reserve took the interest. By the way, would you loan me money for 30 years at 3% interest rate? Like, can you imagine that? If the inflation rate was 8 or 10%, would you loan money out at 3% interest rate for the rest of your life?
Not in a million years.
Okay, that's what the banking executives in the U.S. did. At the point when the
You're talking about Silicon Valley Bank.
all of them, right? Pretty much.
All these guys.
Not just the ones that went bankrupt, right? There's a host of banks. I think they had, what was it, like $800 billion of unrealized losses or something. A host of banks went, and anybody that bought mid-dated or long-dated bonds at the bottom of the market when interest rates were 0, they were loaning out money forever at 2% interest or 3% interest or 1.5% interest. And as soon as you redeem, what happened, of course, is the Fed raised interest rates from 25 basis points. Actually, the rates went from 0 to 500 basis points in 12 months. That's the sharpest increase in interest rates in memory. That in itself is, I'm not going to say what it is. It's just horrific, terrifying to think that any public servant would do that. But it's equally terrifying to think that if I was your money manager and if you had given me all your money when interest rates were 0, and I said, well, I guess interest rates will stay 0 for the next 30 years, and so I'm going to loan it out as a bond and lock in a price of 2%, you would have thought I was crazy. No, there is no individual, no corporation, no rational corporation, no economic actor that would loan money forever for 3% interest when inflation is running double or triple that. So the question is, who would? And the answer is a bureaucrat, either a governmental bureaucrat, someone that is coerced by regulatory policy where they're forced to. For example, a bank can't buy Bitcoin, but a bank is almost obligated to buy treasuries. Right? So the politicians create a set of rules that strongly encourage you to do certain things and strongly discourage you to do other things. And generally, they encourage you to do the thing which is probably least economically viable. Yeah, so let me just answer 2 questions. What do I think will happen in the banking system, and what do I think a person should do? What I think happens to the banking system is all of the regional banks, the small, mid-sized banks are at a massive disadvantage right now because the government is showing that they're not going to bail out those those equity holders. So there's a migration of deposits from the small banks to the big banks. I think the JP Morgans, the Bank of Americas, the mega banks will continue. They'll be just fine. They'll be supported by the government. The small banks are going to struggle, and that's what you see going on right now. If you're a depositor, you'll probably get bailed out by the government. If you're a bondholder in the bank or an equity holder of the bank, you won't get bailed out, right? And so there's a crisis for investors, whereas everybody that's a depositor doesn't want to sit around and take the risk, right? Who wants any anxiety? So I think that to the extent that you rely on banks, clearly the world is waking up, and the U.S. is waking up, and they're thinking, I want to be with big banks. I wouldn't have my money in a bank anywhere outside the U.S. in a weak country, right? You need to be in a rich, strong country with a rich, strong bank. With regard to what individuals should do, I think the logical answer is for expenses. If you have expenses in the next 3 months, you have your expenses in the local currency, which is the peso, the naira, the whatever, because it's legally obligated for you to pay in the local currency. For the next 3 years of expenses, or 1 to 3 years of expenses, you put your wealth in the strongest world currency in the world. That's the dollar right now, but you make sure that you have that currency either self-custodied or you have it in a bank that you trust. That's hard. If you can't find a bank, if you were in Lebanon right now...
Can we trust you, bank?
If you were in Lebanon right now, you wouldn't put your money in any bank. You would actually put it on the Bitcoin blockchain. For any amount of money you want to keep the rest of your life, if you want to give it to your kids, if you want to actually retire on it, anything that's investable asset, you would put it in Bitcoin. You would put it in the strongest possible world currency, the global money. And that's Bitcoin. You're not going to get rich investing in dollars. And you'll lose all your money if your dollars are in a weak bank. And if your dollars are in a strong bank, you'll just get poor slowly. And you're going to get poor. You're going to get poor rapidly if your money is in not the dollar, but a weaker currency. And you're going to get completely bankrupt if you trust a weak bank. And so MicroStrategy, by the way, we had like $90 million. We had $4+ billion worth of Bitcoin. So go figure, right? 98% of our assets are actually in the strong money. 2% is in the world's strongest currency in a good bank, in one of the big 4 banks, right? And that's about as much exposure as I want to a currency. You need this near-death experience, this mortality event, before you will open your mind to embrace a new idea. And if you live in Argentina, when you talk to Argentines, they say, my family has been completely bankrupted twice in the past 30 years. Okay, so in South America, if you live in Venezuela, well, they've all been bankrupted twice in 10 to 15 years. If you live in Brazil right now, I think the interest rate's approaching 14%, right? Money is hard to come by. And if you live in Africa, the Africans live under the CFA, colonial franc, where they lose half their money every time they change currencies, and it's not convertible. And if you lived in Nigeria, you wake up one day and the bank says you're only allowed to have $42 a day. And if you live in India, you wake up one day, this press release that says all rupee notes of 10,000 rupees or whatever above are now illegal, and you have to turn them all in the next 48 hours, or else they're null and void, and someone just invalidates the currency. If you lived in Russia in 1998, all the banks failed, and the ruble went to zero, and everybody lost everything. So I think that people that live in other jurisdictions, if they've ever been completely bankrupt or seen their economy completely collapse, Sri Lanka, another good example, when that happens, then when someone says, okay, well, here's a bank in cyberspace and an asset that no one can meddle with and no one can corrupt or tamper with, You think, well, tell me more about that. But if you're a wealthy American, if you're Warren Buffett, you know, we have a very famous example, a video that's going viral on Twitter. 13-year-old girl says to Warren Buffett, I'm really worried about the US dollar as the reserve currency of the world. We're printing lots and lots of dollars, and if we're not the reserve currency, the value of the dollar is going to collapse. We're going to have hyperinflation. What should I do, Mr. Buffett? You know, and I wouldn't normally criticize, you know, a respected, successful business person of his age. But he and Charlie Munger did choose to go up on stage and answer questions and give financial guidance and advice and investment advice, and they are looked up to. And so you watch Warren Buffett answer the question, and his answer is, well, yeah, I mean, I guess the Fed inflated the money, but they needed to. And, you know, it's really difficult, you know, and politics have a difficult problem. And yeah, you're right, it is a problem. And Munger will say, you know, the dollar's going to zero. It's going to zero. They know it's a problem. And then he kind of meanders through it with an end advice, which is, well, you know, I don't know, but, you know, America's a great country. Don't bet against America. But the blood-curdling, terrifying, you know, depressing, you know, takeaway from the clip is the 13-year-old girl knows what the problem is. The country's full of people that can articulate the problem and write 1,000-page books on the problem. If you're rich in America, you don't have the answer because you're too comfortable, right? And so what you've got is a bunch of mega billionaires that are very successful in America, but they don't have an answer or solution to the 13-year-old girl. The solution to that question was Bitcoin, right? And Warren Buffett and Charlie Munger can't allow themselves to understand that because they're so successful, they don't need to open their mind to and embrace a new idea. If Warren Buffett woke up tomorrow and his bank seized all of his assets and they were devalued to zero, and he was a pauper, and his neighbor, the Uber driver, was walking around with $100,000 worth of Bitcoin on a hardware wallet, Warren would say, what is that again? Explain that to me.
Yeah.
What do you mean? My government, my bank can't steal all my money? That's a pretty good idea. Right? And so I think that when you're a refugee from fleeing Iraq or you're crossing the border, and you know, when you try to go through an airport and a hostile regime steals all your money and seizes all your gold, when you have to flee your 1,000-acre or 10,000-acre farm in Africa because a hostile regime decided it was illegal for people like you to own land, when that happens, you become a believer in a non-sovereign store of value crypto asset network, which is what Bitcoin is. The people that came to this country, the Huguenots, you know, the settlers, the colonists, I think they understood it. I mean, they had all their property seized from them from wherever they came from. And their idea was, here's a place where I can own something and people might not steal it from me. As soon as they got here, people started trying to steal it from them again. Right? That's the human condition.
Just slower.
Just slower. But that's why they kept going west. It's like, I got to go west where there's no politicians to steal it from me. Right? And that's a pretty powerful driver. So I think that the conclusion is people that are comfortable, they're fat, dumb, and happy in the United States are going to continue to reject new ideas like crypto assets like Bitcoin because they don't have to. If I don't have to embrace a new idea, when I get to a certain age, I won't. And that is as old as the Thomas Kuhn structure of scientific revolution. He said, paradigm shifts only get embraced in times of war or when the old guard dies. If you want to introduce a new idea, you need a war. Wars kind of work because if we're fighting a war and I introduce an airplane and I drop a nuclear bomb on your head, then you stop rejecting air power and you stop rejecting atomic weapons. You embrace the reality that, yeah, they do work, and maybe you need to figure it out. Wars work, but absent a war, people just have to, they just have to pass on because they're not going to embrace the new idea. If you don't spend, first you have to have an open mind and say, is it possible that this works? And then second, you have to spend somewhere around 10 hours to understand it. I just don't think he has an open mind, and I don't think he spent 10 hours, right? I mean, it's not uncommon, right? People in their 80s and their 90s don't generally embrace the wonder that is the Unreal Engine or TikTok or Alibaba.
90s.
Right? So I wouldn't, again, if they were private citizens, I don't criticize private 80 and 90-year-old octogenarians and the like for not embracing the new cool thing, right? They don't have to like, obvious, right? You don't have to like drone races, my father doesn't have to like drone races in his 80s. That's fine. But the point is, if you're going to tell people how to invest hundreds of billions of dollars or trillions of dollars, and you're going to give advice to a 13-year-old about how she can not be poor or not starve to death, I think that then you have to actually study these things. And the elephant in the room is everybody in the world is facing inflation. Everyone in the world is facing counterparty risk. Everywhere in the world, we're losing faith in governments, banks, and currencies. The solution is a bank that isn't run by people, that isn't subject to the whim of a government, that is incorruptible, that allows you to be your own bank, right? And that is a message that's getting out. We just need to keep beating the drum on that. It is, I think, the most important economic opportunity / issue / technology of our time. I'm quite aware that my impact is at the MicroStrategy level. I get to decide, whether we're going to pay off a $205 million loan or not, right? I get to decide whether we're going to issue $1 billion of equity or not. And I get, so I have an impact over what MicroStrategy is doing as the chairman of MicroStrategy, and I have a responsibility to my employees, my shareholders, and the like. So a lot of my work is there. And then I have the ability to have an impact and a need to be engaged in the crypto economy. So I'm spending a lot of time on Bitcoin education, Lightning, development of Bitcoin applications on the Lightning network, those sort of things, right? That's where I can have an impact. In the macro economy, I study it because I want to know what's going on with China and Russia and interest rates and hyperinflation in Argentina. But I don't, I have no belief that I'm going to be able to control that, right? Like, I don't pretend to be able to direct Argentine macroeconomic policy. And with regard to politics in general, you got to pay attention to what's going on with, the Tucker Carlsons of the world, and you got to pay attention to the presidential race and the politics, the Senate and Congress, and the regulatory activities. But it's above my pay grade, right? If you look at my Twitter profile, I have laser eyes. And the significance of laser eyes is if you want to make progress in this world, you have to focus and channel all of the energy you have behind a very, very particular objective. And I have one laser-like focus, right? Bitcoin is good money, right? Bitcoin is good for the world. Bitcoin is global freedom, global property rights.
Interesting.
Right? Like, I have 100 other opinions, but if I actually filled my feed with here's what I think about bicycles, and here's what I think about diets, and here's what I think about health, and here's what I think about, labor policy, and here's what I think about states' rights, and here's what I think about this country, at some point, you just dilute your focus, and you don't have that much energy in this life. "92% of the people are dying of natural causes. 95% of the bandwidth, it bleeds, it leads. 95% of the bandwidth is the most colorful way to die, right? It's not the most likely way to die. It's the most colorful way to die. And so I think that all media is distorted, and they're all edited, and they're all focused to a certain agenda. The only thing you can reasonably do is you can scan a bunch of them. You can scan, your own Twitter feed will also be distorted, so you have to scan other feeds. And then you have to be continually going through this exercise in your head of saying, that happened, is it true? And then how significant is it? For example, Argentine inflation, 105%, is it true? No, because the actual inflation rate is higher. It's indicative of a truth. How significant is it? Well, how many people live in Argentina? That's one level of significance. The second is how much money's in Argentina. And the third level of significance is how symbolic or how indicative or catalytic is it to other activity that will happen in the rest of the world, right? How symbolic is it? When you get to your 50s, if you read the same history book and you're reading it in your 50s, it's like, wow, I totally interpreted this differently when I was a 9th grader, right? When I was in college, I interpreted this differently. So you have to have real world experience. Oftentimes, you'll read a story and they'll state something, and the truth is the exact opposite of what the story is, but you have to have lived life. Like, for example, you read a headline, we found 500 stone axes in a cave in Africa. They're between 1.2 and 1.7 million years old. Well, a school kid will say, oh yeah, so I guess they found some stone axes. I look at that and I say, well, there was a factory that made stone axes in Africa 1.7 million years ago. That meant that there was demand for thousands of stone axes a year. That meant that there was an entire civilization that existed, right? In fact, there was money, there was a government, there was a furniture factory, there was a clothing factory, there was agriculture, there was an entire society. You had to have 10,000 people all working together in coordination to justify having an inventory of 500 stone axes, right? And the only reason you actually read about the stone axes is the only thing that's going to last 1 million years from now, right? And so what was there was 1,000x more interesting. The fact is, there was an interesting higher level civilization with agriculture 1.5 million years ago. They're not writing that in the history book because the literal historian only wants to report the bare minimum. But the reason that I could actually tell you 1,000 other things is that I actually read books on Austrian economics. I ran a business. I traded. I saw the meltdown and the creation of dozens of industries, and I understand human nature, right? And so if you understand, and you live the life, you're like, well, if I drink cartons of orange juice every day for months in a row, I know what's going to happen to me. It's not good. You can reverse that, right? And you can figure out what people ate 100,000 years ago. They didn't do the things that we don't really think are good ideas today because they wouldn't have procreated through 100,000 generations. The time when you are most confident, when you have the most amount of formal education and the least amount of real-world experience, like in your early 20s, right? Because you think you can do it better than everybody else, and you haven't failed. And when you get another 25 years out, you're like, oh, I tried that didn't work. I tried that didn't work. I tried that didn't work. Oh yeah, that was a really good employee, but they quit because I was rude to them. Oops, I wish I hadn't done that. Oops, took that for granted. Bitcoin's never been hacked. So the only people that suffer with Bitcoin are people that trust their Bitcoin to the Sam Bankman-Frieds of the world. If you put your Bitcoin in Celsius or BlockFi or FTX, if you put it in a wildcat bank and the bank steals your money, right? The real message of Bitcoiners is don't trust, verify, and be your own bank, and not your keys, not your coins. So the message of Bitcoin is you can't trust anybody. If I actually told you the world is made up of imperfect people, and let's say there's 100 families and we all have money and none of us trust each other, and we all know we have idiot kids that are going to take over the family business in time, and we want to create a community bank where we can collectively put our money, the answer would be, well, you don't put anybody in charge of it. You don't put any one family in charge of it. You might be the smartest amongst us, and your son's going to have an idiot son, no. And eventually 3 generations down the road, it's not going to work anymore. So you write a piece of software. Everybody checks the software. We all agree the software is honest. We put the software on a computer. Nobody trusts your computer. We create 100 computers. Everybody runs their own computer with the software. We all agree collectively not to change the software. And anybody that tries to change the software gets kicked out of the network. That's what Bitcoin is. It's an honest approach to solve a problem when you can't rely on a person, you can't rely on a family, you can't rely on an institution, you can't rely on a government. What we rely on is the collective self-interest of rational people over time with regard to that one thing. And it really is a beautiful invention. I would say that any rational person that studied Bitcoin for 10 hours knows that there will never be more than 21 million Bitcoin. And so you know there's less than that because some millions of Bitcoin have been lost and they'll never be spent. And so you're buying Bitcoin because you know it's capped, and you know that gold and silver and oil and soybeans and paper currency and land and apartments are not capped. Everything else on earth is going to keep increasing in supply forever. Bitcoin is not. So once you figure that out, then the only question is there anything better? And you sift through the other 20,000 cryptos, and if they're not better and they're not better, then this is the one. Now, every intelligent person with money has put their money on Bitcoin. So what are you going to bet on? You're going to bet on the networks that were invested in by people without money that aren't intelligent, right? So Bitcoin is the winner because the smart money has chosen it. There are a lot of other catalysts, right? Every time there's hyperinflation in a place like Argentina, it's a catalyst. Every time a bank fails, it's a catalyst. Every time someone builds an application that's cool on Bitcoin, right? Like all the ordinals and inscriptions and whatever, they're driving up transaction fees, it's a catalyst. Every time a company like MicroStrategy buys another $100 million worth of Bitcoin, it's a catalyst. Every time a regulator actually clarifies the fact that Bitcoin is a commodity, an asset without an issuer, and it's special, that's a catalyst. So lots of catalysts, they're all going to continue. The result will be Bitcoin will chop its way up with volatility forever. Just going to keep grinding up. Because for you to believe Bitcoin's going to grind up, all you got to believe is that human beings have a natural tendency to want to improve their life and protect their property and benefit their friends and family. So Saylor is pro-freedom and pro-markets, and Saylor he's an Austrian economist, so all value is subjective. So here's what I think. I think everybody should be able to launch whatever business they want to launch. And I think everybody should be able to pursue their happiness however they want. And I think that lots of people will create lots of things that won't work. So I'm not going to give you a recommendation of stocks, because some businesses will work, some won't, and some stocks you will buy too high and some you will not, and I don't want to be on the hook for 10,000 stocks. I'm not going to tell you how to gamble, but I'm not going to tell you not to. I'm not going to give you a recommendation for a private business. You want to collect art? I'm not going to tell you not to. I'm just not going to tell you which piece of art to buy to make money. I don't know which thing is going to work. And I know that over time, all fiat currencies will fail. And over time, I believe most businesses, in fact, all businesses will not be as good as investing in Bitcoin, because Bitcoin is the low risk asset. I do think that what happened over the past 5 months is pretty interesting. If you go to New Year's Eve, the average fee on the Bitcoin blockchain was like 3 sats per V-byte. I mean, there were blocks every 10 minutes that had $600 of transaction fees in them, right? And so the miners were getting a reward of $100,000 with $600 or $300 of fees. So the fees were 1% of the reward.
Yeah.
They were nothing, de minimis. and what happened over 5 months is Bitcoin had a massive rally. All of a sudden, the miners were getting $150,000 or $200,000 reward. But then we saw fees, transaction fees that got to more than 6 Bitcoin, which was $180,000 in fees. So we went from $1,000 in fees to $100,000 in fees, a factor of 100 increase. And the fees started to approach parity with the reward. If you're an investor in Bitcoin mining, if you're a Bitcoin miner and you want a bullish thesis, in order to have a bullish thesis, you want to see that fees, transaction fees, are at parity with the rewards. And you want to have a belief that transaction fees will increase at a rate faster than the hash rate. So if the hash rate's going up 20% a year and transaction fees are going up 30% a year, then that's a good business, a really good business. And so in a world where transaction fees are 1%, they're irrelevant. You don't have parity, and then the growth rate doesn't matter. And then all you see is the rewards are decreasing 18% a year, and that's a bearish scenario. So I think that what happened with ordinals and NFTs is we crossed this chasm from what was a bearish scenario to a bullish scenario. If I was a miner, I would be ecstatic. You know, if you wanted to move $10 million of oil from New York to London, it would cost you about $350,000. So what if I want to move $10 million of Bitcoin from New York to London? What if I want to move $10 million worth of a document of something if you wanted to sell a $10 million work of art, that's $500,000 to $1 million or more in auction fees. Mm-hmm. So people have thought, well, transactions, man, there's no future for them. But I actually am of the opinion that transactions at $1 or $2 a transaction, they're very undervalued. This is the most valuable, most tamper-proof, immutable, secure transaction network in the world. If I gave you $100 billion and I said attack the network, you couldn't do it. If you were a nation with $100 billion and 4 years, you could slow it down, but you couldn't stop it. So I think that the real significance of ordinals and NFTs and inscriptions is people used to take the transactions for granted, and they undervalued the Bitcoin mining network. And now I think what you have is a lot of speculation, and you also have a migration of crypto development energy from the other cryptos to Bitcoin. That's a good thing, I think. It's inevitable, because Bitcoin is the low-risk crypto network and the high-security crypto network. So you're going to see speculation move. You're going to see development move. But long-term, what's really significant here is that people are going to see Bitcoin as the most secure cyber network, or the most secure computer network in the world. And if I told you I'm going to burn a document and I want it to stay immutable for 100 years, and I don't want any hostile corporation or nation state or actor to be able to tamper with it or stop it, and in 100 years I want to prove that that's my document. You know, Satoshi could sign a digital document. He could sign a message today and prove that he owns $30 billion of Bitcoin, and he could do it in a split second. That's the power of the Bitcoin network, and that has been under-realized. It's underestimated. So I think that what's going to go right now is it's going to be a lot of excitement, but ultimately the ethically sound, technically sound, economically sound future is for people to realize that Bitcoin is this immutable, incorruptible, non-sovereign computer network, and it's going to protect your money, but it's also going to protect your integrity, and people are going to pay money for truth on that network, and that's what's going to finance those miners. And when you look at all those miners running in Texas, you're saying, what are they doing? They're protecting the integrity of Western civilization, they're protecting the integrity of the human race for the next 1,000 years. I think that the number one criteria to run an organization, is humility combined with a bit of wisdom from life experience, but combined with an extraordinary amount of energy. You have to eat, sleep, and breathe the thing. And I think that organizations that have people with too much confidence, they tend to go off the rails. And so it's good to know what you don't know. Another big part of what's going on right now is the other side of this, which is investors in the mainstream are going to understand, based upon results, why a digital commodity is a better idea than a digital security. And that's happening in front of our face. 98% of the stuff in the crypto ecosystem is going to shake out. There's going to be a few strong players that will go through the registration process, and they will grow up to be a registered, fully disclosed currency, like a Circle or a Tether will have to become registered and regulated. There may be a few digital securities. There'll be a massive fight over what that means and what you can do with it. The digital exchanges, both the crypto exchanges and the DeFi exchanges, will have to register, and this entire Wild West environment will start to dissipate. It'll be like the meteorite that hit the Earth, 80 million years ago, and a lot of stuff will get wiped out. A few things will rise out of the crypto ecosystem that'll be cleaned up, and then a lot more mainstream actors will enter this space. Mainstream investors, mainstream banks, mainstream financial providers, registered companies, and the entire industry will take on a new character. Today, we struggle with the challenge of authority. Lord Acton said, absolute power corrupts absolutely. And the only difference between absolute power today and absolute power 10,000 years ago is today we have a company that listens to everything a billion people say. We have another company that answers the questions that 4 billion people ask. We have companies that deliver the food and all of the goods that you need to survive to hundreds of millions of people. We have one company that delivers all of the business software to 80 million corporations, indirectly serving billions and billions of employees. Now, I ask you the question, if you got ejected out of the 3rd biggest country in the world, or if I denied you privileges to live in any of the 5 largest countries in the world, would your life go on? Probably. Now, what if you actually got canceled by Apple, Amazon, Facebook, Google tomorrow? The question is, would your life go on? Stop and think a little bit about what happens if they simply turned off your account, seized your photos, turned off your messages, took your documents. What if Microsoft just denied you access privileges? Could you run a business? Could you work? It's a big question.
human nature doesn't change. That struggle existed 100,000 years ago. That struggle exists today. What does change is technology. 100,000 years ago, an enraged human being could maybe kill 10 other people. And today, an enraged human being can kill 100 million people. And so as technology advances, our thoughts about ethics and morality and technology and civility have to evolve. So the question really is, what happens if this goes on? Companies get bigger, we got big tech, governments get bigger. As the companies get bigger, when the company serves 3 billion people, then that means one bureaucrat can make one phone call to that company and potentially turn off all of the information flowing to all 3 billion people over the weekend, right? This is it's a new idea, and it's a disturbing idea. You know, if another famous writer, Robert Heinlein, he had a quote. He said, "You don't win wars by dying for your country. You win wars by making the other guy die for his country." We don't want to be martyrs. We want to be winners. And that is the challenge we face today. There's no point in going on strike unless you've formed a union first. Just going on strike without the organization in advance is just self-inflicted martyrdom. Bitcoin is a union. I'm going to leave the thought and continue with my speech. We'll come back to it at the end. There's a freedom saga in the history of the human race. What is that saga? Somebody grows up, they struggle against the collective. Life is oppressive. They can't farm, they can't live, they can't worship, they can't celebrate, they can't breathe. So what do? Well, they go over the horizon. Beyond this horizon, we travel somewhere over the hill. After that, we go to the New World. We get in a ship. If you're a Huguenot, if you're a Protestant in Catholic land, if you're a Catholic in Protestant land, if you're a second son, at some point you're a Quaker, you get in a ship, you go to the New World. What happens after you settle the New World? Well, it gets too oppressive on the East Coast. Go west, young man. And we go west. We want to get away from too many politicians, too much government, too many well-intentioned individuals trying to help us with more laws, more government services. Well, in the 20th century, Peter and I are both aeronautical engineers. We read every science fiction writer, and the great romantic science fiction tomes from Heinlein, etc., were all about Earth is too crowded. We got to get off this planet. We got to go to space. Elon Musk channels this aspiration every day. But in general, we all grew up thinking that in the 70s and the 80s. Go to space. Now the problem is, it turns out to be fairly expensive to go to space. We didn't quite make it. We figured out how to send millions of people to the New World, and we sent millions of people west, but we couldn't send millions of people to the moon or Mars or the next habitable G-type star. So where is the next frontier for those thirsting for freedom? Cyberspace. And here, I pause and I ask you to, like Steve Jobs said, think different. Thinking conventionally will get you killed. We will be martyrs, we will not be winners, right? If you want to die for your country or die for your cause, you can do that by thinking conventionally. If you want to win, you need to think unconventionally. We have to embrace new paradigms. The idea of crypto,
or the great achievement of Satoshi Nakamoto, is the concept of creating a truly decentralized network, giving it to billions of people, allowing people to in a decentralized way, protect that network, support that network, serve that network, benefit from that network, transcending the constraints of a CEO, a corporation, a country, a city, a company. Bitcoin is a shining city in cyberspace, and you can go there once you understand it. Bitcoin and objectivism, they have a common cause. Ayn Rand in 1959 said, "I'm for the separation of the state and economics, just as we had the separation of church and state." Whereas Hayek in 1984 said, "I don't believe we shall ever have good money again before we take the thing out of the hands of the government. That is, we can't take it violently out of the hands of government. All we can do is by some sly, roundabout way introduce something that they can't stop." Clearly, both movements are thinking about separating economics from the state and from the collective. The difference is, for thousands and thousands of years, the technology for doing that was imperfect. The technology of gold to separate the power from the state doesn't work when they just shoot you and take your gold. The technology of cows or tobacco or fiat currency or buildings, they don't work that well to separate economics from the state. So although this was an ideal and aspiration, we never had the technology to realize it. January 3rd, 2009 is the singularity. That's the point at which Satoshi Nakamoto developed the technology to transfer value through space without a trusted third party. Most people don't realize this, but Satoshi opened a portal from the physical realm into the digital realm, and energy began to flow into cyberspace, bringing life to a formerly dead realm consisting only of shadows and ghosts, bringing conservation of energy and matter, objectivity, truth, time, and consequence into the digital realm, delivering property rights, freedom, and sovereignty that is separate from the physical and the political realm to humanity. Most of the world, myself included, ignored this chain reaction for the next decade. It happened, it flickered, it burned, we ignored it, except for the OG Bitcoin Cipher punks, and they can tell you that everybody thought they were crazy. In March of 2020, the world came to a grinding halt. Suddenly, billions of people woke up to the prospect of an economic collapse, losing faith in their institutions and their governments. On August 10th, MicroStrategy, struggling with this existential crisis, adopts the Bitcoin standard. At that point, I concluded the road to serfdom is working exponentially harder for a currency growing exponentially weaker. And we saw an escape from economic slavery in the form of what we thought was digital gold. But as I've explained, it turned out to be much more than digital gold. On September 18th, after fully adopting the Bitcoin standard and after talking to some more Bitcoiners, I had this epiphany. I went to Twitter and I posted the following: Bitcoin is a swarm of cyber hornets, serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy. And I think Ayn Rand would understand what I was saying. What it means is, for the first time in the human race, we have unleashed a freedom virus, a truth virus. Bitcoin is something special. Galt's Gulch is the Bitcoin network. Rather than removing your labor from a corrupt economy, you should remove your money from a corrupt economy. Bitcoin's a protocol to create free ideas, free economies, and free assets beyond the control of corrupt institutions. It's a fast, fair, and equitable method to settle the differences of 8 billion people. We say in the Bitcoin world, fix the money, fix the world. Success requires courage, clarity, and commitment. Look, there's 20,000 cryptos. There's one that's 95% dominant, which is ethically sound, technically sound, economically sound. Bitcoin is reared in metal. It's the hardest substance in the universe. Most people don't know it. Most people are afraid of it. Never done that before. When we bought Bitcoin, we bought 250 million. No public company had ever bought any. People thought we were crazy. So then we bought another 175 million. People thought we were crazy. Then we bought 600 million more. People said, you can't stand on it. It'll destroy you. It's like standing on a bridge made of steel. And I concluded, it's the perfect engineered material to solve our problem, but people are living in fear. And how are we going to get them to not be fearful? And I was reminded of Andrew Carnegie's example. It's like build the bridge, go stand out in the middle of the bridge. You build an airplane, fly the airplane. Show people that it's not going to break. That's what MicroStrategy did. We said, well, if it's good for 100 million, it's good for $1 billion. If it's good for $1 billion, we might as well go for 4 billion. Right? And at some point, people will realize that they have more to fear by not embracing this technology than by embracing it. Right now, it's a $400 billion asset. There are $400 trillion of other assets floating around in our current fiat system. They're leaking energy, they're corrupt, they're inefficient, they're controlled by the collective. Bitcoin is 0.1% of the human race's liquid energy. 99.9% of the world doesn't get it. They're not there. That 99.9% haven't moved to Galt's Gulch. That means you're still early. So you can plug in yourself, your company, your organization, your agency, your product, your service, your family, or your ideology. I said to you at the beginning of the talk, Bitcoin's a union. The union gets more powerful as more people join. And in the war for the future of money, it's going to be won with money. As the money moves into the network, the monetary union gets more powerful. Everybody that joins the network has that much more power, and your only hope against the oppressive force of the collective is to unionize your own activities and organize your activities with people of like ideology that believe as you believe. More money, more people, more power. Bitcoin is an economic machine based on a truth machine, poised to emerge as a freedom machine. It's the best choice we have to save our civilization and realize the ideal world envisioned by Ayn Rand and the objectivist movement. Join us.
Look, if you're going to invest in Bitcoin, a short time horizon is 4 years, a mid-time horizon is 10 years. The right time horizon is forever. You know, Warren Buffett said, you know, if you wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes. So if you look at the course of 4 years, no one's ever lost money over 4 years holding Bitcoin. And if you look at, you know, our experience, we started buying it at $10,000 and now it's up by a factor of 4. So given the right time horizon, you're fine. So it's a blessing and a curse
the blessing is it makes it the most exciting, interesting thing in the financial universe everywhere in the world. And the curse is it can induce anxiety for people that have a short attention span or are focused on a narrow time horizon.
You want to make a lot of money? There's two ways to make a lot of money. One way is you take something you have huge conviction on and you leverage it. Like I'm levered long Bitcoin, right? I had 250 million capital. I currently have 6.2 billion position, okay? My bet is $6.2 billion. How did I get from 250 million to 6.2 billion? That's like laser-like focus, you know, like all the Bitcoiners, we got laser eyes. The point of laser eyes is focus on how you can get more Bitcoin, okay? There's another way. You can go and buy another coin that might go up by a factor of 100 without leverage. But, you know, then you're trying to pick which of 100, you know, or you could pick a stock. So now you're trading, you know. Google was a good play over the last 12 months. It's up 80%. Amazon looks like it would have been good. It's been a disaster. Okay, so who would have guessed that Google was going to destroy Amazon 12 months ago? And will they keep doing it quarter after quarter? So that's a different thing. It's not for us, right? I mean, I'm more interested in how do you borrow $1 billion for 0% interest? Look, I think Bitcoin is by far the highest upside, lowest risk, clearest choice, most compelling trade of the decade by far. Everything else would be dilutive. If I was Facebook and I wanted to clean up cyberspace and I agreed to let someone post 100,000 Satoshis in a Lightning wallet in order to get verified by Facebook, and then that allowed people on Facebook to know that I was going to be civil and safe in my behavior, they might very well get 1 billion people to plug Lightning wallets into Facebook and deliver civility and safety in cyberspace for 1 billion people, and they would get rid of all the scammers, imposters, trolls, and eliminate hostility toward children and women, and shut down a whole set of scammy schemes that go on in the platform. So you can make your product better using something like Bitcoin and Lightning, right? I mean, Twitter just allowed you to tip using Lightning. That's a good thing. The ability for anybody on the planet to send $10 to anybody else on the planet, that's a product improvement. The Chivo wallet in El Salvador allowed 3 million people in El Salvador to set up a bank account in 3 weeks and get money for, you know, with no remittance fee from anywhere in the world instantly at the speed of light. They were paying hundreds of millions of dollars a year in Western Union fees and wire transfer fees. So if you're using Bitcoin and Lightning in your product, you're probably making the product better. If you're just offering to sell your beach house for Bitcoin, you know, all you're doing is marketing. I mean, nobody in their right mind would want to trade an asset going up 140% a year, you know, for a liability. You know, like if you bought a Lambo with Bitcoin, you could have been like a billionaire 8 years later. So probably not a good idea to I wouldn't trade my Bitcoin for any asset, right? Name one other asset that's gone up 140% a year for a decade. And the answer is none. There's nothing. There is no stronger asset. There's no stronger trade. There's nothing, there's no higher quality property you could possibly own than pure digital energy. Pure digital energy, or pure digital property. It's better than the best stock. It's better than the best land. It's better than the best building. It's better than the best anything, really. And so a better idea, instead of selling it, would be pledge it as collateral for a loan. I have $1 million of Bitcoin. I borrow $100,000 at LIBOR plus 100 basis points, or LIBOR plus 500 basis points. I pay 5% interest. I buy the Lamborghini, and then the Bitcoin doubles and doubles and doubles, and in about 8 years, I have $1 billion, and I still have the Lamborghini. The only safe harbor for an institutional investor, if you wanted to invest in digital property, is Bitcoin. It's not that you can't invest in a security, but the problem is, if it is a security, there's all sorts of questions about can you trade it and when, and it's unethical for a politician or a public figure to endorse a security. So there's all sorts of problems with them because they're not registered securities. Let me say it this way. There's 4 types of buckets of money. There's the saving. If you want to save money and give it to your grandchildren, then you just convert a weak asset to a strong asset. And that means you sell currency and you sell stocks and you buy digital property like Bitcoin, or you buy like land you're going to give to your grandchildren. You know, you're buying hard, tangible something to hold 100 years, right? If you're an investor, you invest in a company or technology you think is going to be a screaming win, and there's risk. It might have competitors, it might win, it might lose. The Ubers, the Airbnbs, the Apples, the Amazons, whatever. It's an investment. If you're a trader, you're trading risk derivatives and what direction is the yield curve going to go, and you're trading pairs, this will do that. And you know, you're about speed and leverage, and if you know you're a good trader, you know how to trade something, you know it, right? If you don't know you're the best at doing that, then you probably shouldn't do that. But people do it. If you're just focused, you got to be focused. And then the last is speculation. And you know, sometimes you want to speculate. It's fun. You go to a casino, you gamble some money, you gamble the money that you can't afford to lose. There's some things that are speculative. As a publicly traded company, I have legal, ethical, civil liabilities, right, to my shareholders. I need to disclose what I'm doing. I need to register it, right? I'm a fiduciary for them. So we have a very straightforward strategy. It's like, we're going to buy and hold Bitcoin. What you want to do is get rich slowly, not get rich quick. And that means that the time-tested technique for investment is you buy high-quality, scarce, desirable property and you hold it forever. And you just got to figure out what is scarce and desirable and high quality. I think that Bitcoin is the only asset in this space that is broadly institutionally held, and it is more than zero. For example, we bought $4 billion of it, so we know that companies have it, we know that institutional investors have it, we know there are insurance companies that hold it. So it's not zero, but it is not nearly as broadly held as it will be. And I think that we're still early days. I think that the institutional interest in Bitcoin has dramatically jumped in the macro community and the hedge fund community over the past year. I think you can see in the body language and the rhetoric of JP Morgan and Goldman Sachs, you know, Jamie Dimon, and the way that David Solomon speaks about us, and the way that BlackRock speaks about it, and the way that Ray Dalio speaks about it, and the way that George Soros speaks about it. You can see that we're no longer at the stage where people are skeptical that it will continue to exist or skeptical of its value. I think it's now got the grudging respect of a lot of people. We're really more at the stage where we're waiting for regulatory clarity. There's just a lot of political debates, you know, at the DC level over how much friction will be in the space. I think the banks would like to see more clarity from banking regulators about how much they can hold on their balance sheet and what the reserve ratio would be. And I think the accounting treatment clearly has been a liability for large institutions, because indefinite intangible is always going to understate the value and it's also going to create, it's always going to create confusion. Because I could hold $1 billion and you could hold 100 million, and we would both look like we held 100 million, and you would have to dig deep into my financial statements to know the difference, and so it just makes everything hard and opaque. So I think that we have more adoption to come, and every single thing that happens, every time that there's an advance from the FDIC or FASB or CFTC or SEC or Congress, I think all those things are catalysts for adoption, and we're going to see more institutional adoption as time goes on. I think that Bitcoin is 1,000,000 times better than gold, and is going to gradually demonetize gold over time. So no, gold will go to the utility value of gold, whatever that utility value is. But I don't think it's going to be adopted as money in the 21st century. I think Bitcoin is a better gold than gold. You can move it at the speed of light. You can see with the Lightning Network evolving that pretty soon we'll have 1 billion people able to move any block of Bitcoin anywhere friction-free. And so Bitcoin is digital money for the 21st century. Gold was metallic money for the 19th century. So I just think if you believe in sound money, then you should do yourself a service, and you ought to sell your gold and you ought to buy Bitcoin, because Bitcoin is sound money for the 21st century and gold was sound money for the 19th century. Just that simple. The dollar is the strongest medium of exchange in the world, and so it is strengthening against other currencies, but the currencies are the weakest store of value. The foreign currencies are weak store of value assets. So foreign currencies are collapsing. South American currencies, African currency, Sri Lankan currency, Middle Eastern, Turkish currency, Lebanese currency, Russian, Ukrainian currencies. Russia, I guess, doing better because they're tied to commodities. But I think that you've got a basket of strong currencies to be pegged to the dollar, and they're losing 15% of their value or more a year against scarce assets. And then you've got weak currencies that are losing 15% of their value against the dollar, right? If we look, the South African Kruger rand, the Korean won, the Great British pound, the euro, they're all down 11 to 13%. Polish is down 16%, the yen's down 18% over the course of about a year. So they're collapsing against the dollar. And then the developing markets are collapsing 40% against the dollar. So do I think it'll continue? Yeah. I actually think that in a digital world, the 8 billion people want to hold the dollar. They don't want to hold a local currency. So if I could swap, name a currency in South America you want to hold other than the dollar. There isn't one. So the only thing that keeps people from swapping all their local currencies for dollars is whether they trust Tether, or whether they can get access to Tether or Circle, right? Right, because UST wasn't a trustworthy dollar, right? And maybe you can't get access. But I think that there's no doubt if you're looking at your bank freezing your assets and devaluing your assets in local currency, you want to hold the US dollar as your medium of exchange. And you want a simple world, or a simple way to see the world. If you need your money in less than 4 years, you probably want to keep it in the dollar. And if you need your money in more than 4 years, if you want to hold it between 4 and 40 years, you put it in property. And the best property in the world is Bitcoin, and the best currency in the world is the dollar. And there are weaker properties, like an Airbnb or building or stock, and they're weaker because they've got counterparty risk, and they've got tax risk and execution risk and competitive risk. And maybe they're not so portable. You can't really move a ranch out of Zimbabwe to San Francisco when you have to flee the country. So what can you move out of Africa to San Francisco when you want to flee the country, right? Bitcoin you can move, and the rest, unclear. So I think that the general macroeconomic trend, what can you say? You can say the economy doesn't work so well, right? The economy doesn't work so well. It stopped working well in February of 2020, and I think Lynn Alden tweeted a chart of Japanese tourist arrivals, where the entire Japanese tourist industry went to zero in March of 2020, and is still at zero. So it's pretty obvious some things just don't work. The economy's not going to work well. The money supply is increasing. The Inflation Reduction Bill is, what is it, $600 or $800 billion worth of spending. Everybody's going to keep spending more money. Some currencies are going to collapse completely. The government's going to collapse with them. That'll happen in the developing world. That will result in capital controls. We saw it happen in Sri Lanka. You see in Nigeria and a lot of places now it's illegal to accept dollars for payment. So you're going to have capital controls, you're going to have export controls, you're going to have import controls, you're going to have wage and price controls. That will impair the economic machine from functioning more. As that happens, governments will print more money. As they print more money, the value of the currency will fall against scarce desirable assets. You can't print more energy, and so that's why you can't print more food. So certain things will have tangible value. The best idea in a world where it's very difficult to move cross borders, and it's very difficult to manufacture things, and it's very difficult to buy and sell things, the best idea is digital energy, you see, because